In this video, we're going to talk about how to identify the proper points to enter on the chart using price action rules. And before I place every trade, I need to make sure it follows the three important factors. Number one, I need to make sure I identified the context of the market properly. I need to make sure I'm confident with the pattern I'm looking at, and the market behavior of the setup needs to be positive. So as I'm looking at this structure, this is what today's session looked like when it started. What is the bias in this market? Well, I can see that we are trending to the upside. So the bulls are right now in control. And price action, as you can see these candles working on the chart, they're never without a pattern. There's always a reason to price action. It is not random. So my goal is to identify the proper channel because I'm looking at bullish uptrend. The way I'm going to identify a channel, and generally how you're always going to identify a channel, is you're going to take a look at the first two major swings and see if you can find a decent channel. So this is the first swing. This is the second major swing. So if I'm just going to connect them, you can see I'm getting a third swing confirmation. I'm just going to copy it, put it at the top. I can also see some nice geometric formation here. You can see how these candles are really confirming the channel, which makes this right now a bullish structure. So the context in this market is bullish, and this pretty much will dictate my decision when it comes to looking for setups, because I'm only thinking for market to go higher. Now you can see that we broke the channel right here. According to trendline rule, I expect for market to create new extreme, to test the latest extreme inside of this channel. Okay, I'm not looking for prices to reverse instantly because this channel is in play. As long as there is a break, there's a chance for prices creating new extreme. Now, as I'm trending this bullish uptrend, I cannot just go long anywhere on the chart. I need to find the proper place to enter, which means I'm looking for two-legged pullbacks or variation of two-legged pullbacks at the proper key entry point. And also notice, I'm drawing these channels for the corrections, because once there is a break new extreme, that generally indicates that the correction played out and I'm safe to be looking to go long. So how do I count for two-legged pullbacks? Well, I count from the most recent high. Let's take a look at this correction. We have a new high, first entry long, pullback, second entry long. So we have second entry long right here, followed by higher low confirmation setup of the second entry long. So two high probability setups at two key entry points. Notice this high is higher than this and higher than this. So I'm going to reset the count at this high, which means I have new high, first entry long, pullback, second entry long. So we have two-legged pullback. Because market likes to move in pairs of twos, market cannot continue higher or lower with these just one lines, V-shaped reversals. No, there are corrections within. So I can see two-legged pullback. Can I go long? I expect new extreme. I cannot. It's below EMA. I notice what is happening. Even though I'm price action trader, which means I'm relying on the candles, I'm using this supportive indicator to help me add additional information about the structure. As you can see, EMA is no longer pointing down, no longer pointing up. It's working sideways, and the EMA managed to work its way in the middle of these bars bodies, which is indicating congestion. You can see that right now, there is no clear direction for this market. We're pretty much working sideways, and the way you trade congestion is you sit on your hands because there is no room for prices to scalp for both sides, and you fade the breakout because this congestion is nothing more, nothing less, but the trend range just on a smaller scale, smaller pattern. This is a smaller trend range and most breakouts will fail. Prices broke to the downside and it formed a nice bullish bar. Is this a good setup to take? Yes, this is decent, high probability setup. It has a great signal bar, fell breakout, and uptrend needs to create new extreme. Alright, it was just good enough for a scalp before market continue working lower. And here it gets a little bit tricky because we have quite a substantial bearish push down. However, remember, what was our first bias at the start of the day? This bullish channel. Am I looking for reversal? Well, let's take a look at the structure. I'm going to draw a possible wider channel like this. This is not really how price action works. Notice, push up, channel to the downside. So this would be V-shaped reversal. This doesn't really feel that great. In fact, if I'm going to take a look, I have first push here, little correction sideways structure, second leg down. So because this uptrend is new high, and this is the structure we started the day with. It got confirmed the uptrend with third swing. I'm leaning more towards prices creating second entry short failure. Not second entry short failure. And especially as you're pushing above EMA right here, okay, this is confirming that we may truly get new extreme. I'm just not trying to reverse the market too quickly. All right. So here when I was watching this, I was expecting to get a failed second entry short above EMA, but notice what happened. There were two additional bearish bars continuing to push below the exponential moving average, which confused me a little bit, because if there's going to be a failed second entry short, you really are supposed to be reacting quickly and trapping bears quickly. So once I saw these two big bearish bars, then I thought, okay, maybe there is a wider downtrend and maybe we're going to get lower high. But notice right quickly after, we have a nice big failed second entry short, very strong big bullish bar, which basically negated all these bars prior. So this is a great failed second entry short, big bull bar closing above EMA, largely to like a pullback. And remember, context is bullish. I got a failed second entry short pattern, and the behavior of this setup is a nice big bullish bar. So all three factors are aligning and market get pushing high. Okay, so after we pushing above EMA, this is basically confirming our initial analysis that the market bias remains bullish. We're gonna get new high for this uptrend. Just gonna prepare new high. We have a small break new high of the short-term one. That's not really that big of a deal because the main context still needs to get new high. So there's a chance we're definitely gonna still reach the new extreme. So what am I doing? Well, I'm doing the same thing as I was all the way up to here. I'm just looking for two-legged pullbacks, high lows to buy. So I'm going to reset the count. First entry long because we broke above this bar. This is the first bar we broke above. Pullback, second entry long. So we have second entry long, excuse me, at the EMA, at the key entry point, under the bullish bias. But look at the signal bar. What is the behavior of the market? Horrible. But I'm buying. I want to buy above nice, strong bullish bar. So unfortunately, we can't really enter. We have a double bar entry possibility, but you enter here. Stop loss has to go one tick below this bearish bar, so it's quite big. Just didn't form that well. At the same time, don't forget to withdraw the short-term downtrend. So prices finally created new high for this channel. This high is slightly higher than the highest high inside this channel, which means that right now this big uptrend temporarily played out. Now when I was watching this, I was even possibly looking for some channel like this because of these nice geometric formations. Now that doesn't mean that I'm going to go long, because notice I have low of the day important key level and I have high of the day important key level. But you get confirmed here, I cannot go long directly into this strong resistance. I'm just drawing this to see if possibly we break higher and this channel is going to get confirmed. It never did. Can I go short, however? Well, not really. We have a new high, so we're too late to go long, and it feels too early to sell due to the overall bullish sentiment in this market. Just going to redraw the channel from the latest confirmation of this resistance, and notice prices are pushing lower. Followed by a break new extreme, okay, and we have massive push above EMA right here. And this is important because this basically confirmed your overall context again. Notice if I'm going to zoom back, what is the context right now of this market? Which side is more in control? We can see that, yes, we are going sideways now, which by the way, I can also draw small trend range because you can see, notice how EMA is flat and we have a lot of price swings up and down at the upper portion of this trend range. So this really indicates there's a smaller trend range, which at first I had my support here, but once you push above EMA here, you have to tighten it a little bit. But it's not the most important thing. Most important thing is to identify that we have bullish imbalance in this market. Each new low, major low, is higher than the previous one. Static highs but higher lows, indicating bullish imbalance, which means you're not looking to sell the market, you're looking to buy the market. You're still looking for high probability setups to go long. And remember, if you have bullish imbalance, you don't want to be fading the breakout. Breakouts can eventually work under imbalance in trend range. So after you push above EMA here, this is confirming the bullish imbalance and the bullish bias. So what I'm going to do, I'm going to redraw the channel. And here it's a little bit tricky. I don't know when I'm watching this, if I'm going to select this channel, tight one with the break new high, or this wider one. I believe the wider one fits better because the bullish imbalance confirmed the bullish bias, and chances are you're gonna eventually break higher. So we expect bullish momentum. Gonna redraw the downtrend. And notice what we have. New high, first entry long, pullback, second entry long. So we have second entry long, high probability setup, two-legged pullback. I wasn't really sure which channel to use. We were in the middle of this trend range. But when I'm looking at this from technical perspective, there's pretty much nothing I can say to pretty much skip this, because this is a decent setup. You just have to have the gut feeling that tells you that something feels a little bit iffy here. But if you took it, you definitely do nothing wrong, because you can see two-legged pullback, second entry long. You got stopped out, unfortunately, by one tick, and market eventually continue working hard. Just a little fake out that can happen, which leads us to our next high probability setup, which is double trap. Because everybody who's gonna go short on a failed second entry long too early is gonna get stopped out, and everybody who went long too early unfortunately got stopped out by one tick, and you close back above EMA. So this right here is a high probability setup, and this was actually my only trade for the day that I took, because once you stopped all the second entry long here and market reversed, you know, there's pretty much clue that the bias is still bullish, EMA is holding, and they confirmed the wider channel. I was hoping to get the runner at these highs, but we never really ticked higher, and prices came back and stopped my runner at break even. Notice shortly after we formed high-low confirmation setup of the double trap, but by that point you have two additional bars just working sideways, which at that point you pretty much are working sideways for quite a lot. Now the bar is really good, you feel you're going to push higher, EMA keeps holding, so not a bad setup overall, but at that point on you just have to sit the double trap. Basically it's getting a little bit too stacked. But market created new high for this uptrend, never created new low for this downtrend. Noted there's a break, there is not even an attempt to create new extreme. So once again, what is the context in this market? Well, you don't even have new low, and you have already strong push above EMA, which is once again confirming the bullish imbalance. So you can see there's a reason to price action. So we're pushing above EMA, we have a bullish bias. I'm going to redraw the channel. At first you may be wondering, okay, I'm drawing the channel tight, is this overshoot? Well, when I'm watching this, I'm not considering this to be a overshoot. Why? Due to the bullish imbalance and the fact that I expect this breakout to push higher, I expect for prices to create first new high for this channel before we're going to pull back into trend range. And I was expecting pull back into trend range. We kept pushing higher, which we're going to get to. But I first expect for prices to create new high. But let's first talk about this. We have a high-low, and then we have failed second entry short. High-low would be decent, but notice how far the body is from the EMA, and notice the failed second entry short, quite doji-ish, not touching the EMA. Now it's directly into these highs again, which is not terrible, because eventually sellers are going to get trapped selling the resistance, because they're looking at this tiny picture, but they're not taking into consideration the entire imbalance, which makes you focus more on bullish bias, especially if you have another imbalance here and you didn't even attempt to create new low below EMA. So decent setups, I mean context wise, but when it comes to actual entry here, there are so many cons against these setups that it would be pretty much very aggressive. But market continue working higher, which means we have an uptrend in play. I'm going to reset the count, and notice first entry long, second entry long, your downtrend working lower, break new low, and this is the two-legged pullback high probability setup. This is a great behavior of the market because the signal bar is nice full bullish. EMA key entry point is holding, downtrend played out, so the downtrend is no longer in play, and visual clean two separate legs. Great high probability setup. I tried to take it, my limit order unfortunately didn't get filled. You would need to use the stop order. Followed by a new extreme. I'm going to redraw the downtrend, and now when I was watching this, I was expecting for prices to pull back into a trend range, because we've been working sideways basically from early overnight session. Notice pure sideways structure, so there are not that many clues that we're going to end up with such a strong uptrend like this. Okay, you're playing the price action you get, so I'm going to expect for prices to push lower. However, I'm quickly proven wrong as market kept pushing above EMA here, and another higher high. Okay, so at this point on, it's obvious that we're not trading lower because we were supposed to go lower like this. The fact that we push back above EMA and you're creating another higher highs, higher lows makes me think, okay, there is some different wider pattern. Now you can see that you have first leg spike, which there's possibility for spike in a channel like this. And this was the major pattern that I was playing for the entirety of the session. As you can see, we eventually received a major overshoot. So there's also a chance for slightly wider pattern like this, which is a little bit later on pattern, let's say, because you can find it after you touch here and here. But even this pattern got a little bit overshoot. So you can see there was a very strong bullish rally to finish the day. It's not really that important which channel you have. It's important to be close. That's what's important. And since this channel feels a little bit late of the day channel because I'm not getting confirmation here. At first I was playing the spike cannon channel, but I'm gonna leave this channel here because it's the final version. But I was playing this spike cannon channel at first, like this. Either way, we still have bullish bias, which is important because the context is bullish. And I'm just looking for decent high probability setups. So I'm gonna redraw the downtrend again. We have first leg down, second leg down. We have second entry long, two-legged pullback. But notice we're getting quite sideways, EMA flattening, and notice the signal bar. Bearish bar, then you have bullish bar, so double bar entry or stop loss goes one tick below this bar entry already here. Form quite ugly, followed by a high low confirmation of the two-legged pullback. And the same story basically, you have bearish bar, followed by gigantic bullish bar. So context-wise, these setups are decent, especially this high low. But look at how ugly it formed, and you can pretty much take bearish bars to go long. Maybe only in failures if you're advanced, so not really great entry here. No really great setups here. I'm just gonna redraw the downtrends. That's all I'm doing. I'm just waiting. You can see, okay, if there's no great behavior of the market indicating to me good opportunity, I'm pretty much just waiting. Break, new low formed, okay. So we have new low here. We even had new low here. So you can see there's a reason to price movement. Okay, you can see how these channels that are working break new low. You didn't get new low here, for example, but it can happen. But it doesn't mean you're looking to sell. You have no reason to sell here just yet. Eventually you have stronger bullish momentum, and after that price action goes back normal, break new low, break new low. Confirming our support of this trend range. We can't really go long just yet because we're still below EMA. And here notice what is happening. We have new low formed, first attempt to sell below this bar, failed instantly, and a small little second entry short, failure. Remember, I'm counting for second entry shorts not to really sell because the bias in this market, the context is bullish. I'm counting for second entry short to look for failure, for them to be traps. So we technically have micro failed second entry short, but it is very micro price action and very local. It basically looks visual. If you're just going to zoom back a little bit, you can see kind of like a first entry short, pullback, second entry short. And this is how I treated the price action here, because as you now push above EMA, this is where I'm going to extend the wider channel because I expect this uptrend to be in play, the major one. So I'm looking for high probability setups to go long. So we have failed second entry short here, but notice I cannot go long this far up. There was not even trigger above this bar. You don't really want to use engulfing here because the market was really slow. It was just chopping for a long time. Engulfings, you want to see strong momentum. And then we have high-low confirmation setup, or technically you can treat it still as continuation of the failed second entry short. But notice the high-low, it never really formed above bullish bar again. So same story here, and where was it? Here, right here, these two setups. Bearish bar followed by bullish bar. Now this double bar entry is not that far away from this point, and overall the tail here is not that big, so you're not risking that much. So I'm going to mark it as more aggressive setup. It would have been easy high probability setup with nice bullish bar without this bearish bar, because it would be first entry short, strong push above EMA, confirming the buyers are in control, second entry short failure, and high-low confirmation. Off the trend line is the third swing confirmation of the trend line. EMA keeps holding the key entry point, indicating that prices are not going lower. They're holding here, and even this potential key entry point, you can view it as a breakout pullback. So you have multiple reasons here to go long, just the behavior of the market was not great. Notice I'm going to redraw the short-term downtrend again. You have a second entry long, but you have short-term downtrend in play. And notice how it looks like one leg down. This is a lot of times what I have in mind. Notice this right here. We have a new high, first entry long, second entry long, two separate legs. Two separate legs, first leg, second leg, first leg, separate second leg, first leg, separate second leg, first leg, separate second leg, and suddenly it looks like one steep leg down. So this allows you to draw the downtrend, which means I have to respect the shortened bias, which very shortened bias is bullish. We're drawing these downtrends to make sure we're paying respect to the shortened bias. There's a break, new low formed, and notice we have small little triple test counter trend, no signal bar, and like I mentioned at the time, I was not playing this wide a channel. I had the spike and a channel pattern, which didn't really get confirmation here. And notice very strong bullish push up, which allows us to trust this channel because the bounce off the key entry point basically generated such a very strong push. And naturally, we would be expecting high probability setups. Second entry long, high low at least here, or fell second entry short, and notice nothing like that formed. One of those unique price action where you just have small first entries, first entry long, and market just kept creating first entry long, followed by eventually overshoot. Notice I'm going to redraw the downtrend again. Downtrend in play, you got a break, new low. So finally, I know that I can go long. However, we just had overshoot. Now this channel is, or let's say the structure is too bullish. We're most likely not going to get reversal. However, I cannot really go long below EMA. Or actually looks like we have micro double bottom, but that's very close to being new low. You would want to take high low confirming, but notice so far up and fell second entry short never formed. So price action was a little bit more predictable today. It followed the rules quite nicely. Just here was really a long time without a decent setup, especially if you miss this setup right here, which you'd have to use stop order. You pretty much only had to take a couple of decent setups here. And then unfortunately you have a bunch of great setups context wise, but all of them had a bearish signal bar, which it's not that big of a deal. At least the context worked and price action is following the rules nicely. I'm gonna talk to you next time. Take care, everybody.